welcome back to the Westminster Center for Financial Wellness. This is a business certificate series, this course being on the introduction to investments. If you've recognized my voice already, I apologize for that. I'm Zach Moss, and I have helped make this course in coordination with fellow students that are listed right there. So, this chapter is chapter 5 on understanding equities. Okay, now as always, we're going to be getting into what might be currently some vague terms for you. You might have heard equity thrown around a lot, but it might not be perfectly familiar yet. And as always, I encourage you to take the time to pause this video and Google any unfamiliar words. It's something I do all the time, even in my live classes, where it's not as advantageous to do it because I don't get to pause my live classes. But you get to pause these. So please, if you start to fall behind or you hear words you're unfamiliar with, pause them and Google them. So these are the following 6 sub-chapters that we're going to go through in order to help get a better grasp on what equities are. So we got ticker symbols, understanding stock quotes, order types, buying on margin, short selling, and then calculating gains and losses. First off is ticker symbols, and it's super simple. Ticker symbols are just abbreviations given to companies to help identify themselves on stock exchanges. So they're typically going to have letters which are very easily associated with their businesses. As you can see here, you got Amazon, AMZN. I mean, how intuitive can it be? Tesla, TSLA. I feel like just about anyone could figure out that the only thing missing there is the E. Delta Airlines, maybe you actually have to look that up, DAL, but no matter what, it's going to be somewhat related. And the reason you need to know this is because these are the fancy little thingamabobs that you end up seeing on the big boards in all the movies where there's investors trading, and there's a bunch of symbols on a big blue screen that don't make sense. Well, you now know that at least one part of that puzzle is the ticker symbol, and those ticker symbols represent real companies. So the next part we're getting into is understanding a stock quote page. So just being able to look at a stock and the information given when you Google a stock and understand what it means. The first part of this being the open, high, low, and close prices. These are pretty intuitive. You can read them right there on the screen. Your opening price is whatever the price of a share or a security starts at during a period of time. The close is just the same thing for closing. Now the highest price is whatever the highest it reaches during that period of time would be, and the lowest is the lowest that it reaches during that period of time. Very straightforward. Now this is what's called a candlestick chart, and it's the best chart you can look at to represent those open, high, low closes. These charts are also referred to as OHLC charts, or open, high, low, close charts. Now you might be looking at this and starting to feel a little bit intimidated because it looks like something you see out of a cybersecurity movie. But we're going to dive into the details a little bit, and by the time we look at this same chart again, it's going to make perfect sense to you. Okay, so like I said, these are commonly referred to as candlestick charts. So here we have what you saw on the screen, just more close up. You got green and red. Well, what do those two things mean? Well, a green candlestick chart means that there was a bullish period of time. Bullish means that the price from open to close increased, whatever the market price for that security was. Now you have two tails on both of these. You have your upper tail and your lower tail, or shadow is how it's referred to here. Your lower tail shows whatever the lowest price that security reached during that period of time was. The higher tail shows the highest price that security reached during that period of time. The longer the tails is typically indicative of more volatility in that security. Vice versa, a red candlestick indicates a bearish period of time. Bear meaning that whatever it opened at and whatever it closed at, the market price of that security decreased in value. Once again, it's the same thing for the tails here and here. Okay, so now when we look back at this, we can see that for Microsoft, there is obviously an overall trend of an increasing share price up until this point, when it becomes more predominantly of a bearish cycle from, what would that be, September, maybe that's the 13th up until September 27th maybe. But you can see sort of the volatility that lasts on each day. This is set to 5-hour periods. Okay, and you can see during these moments that whatever the Microsoft share price opened at, it closed at a lower value 5 hours later. That was the spread of its volatility. Here you can see a really drastic difference between its opening and its closing price. Hopefully, if you are very interested in this, you can take the time to pause the video and see if you can't figure out a few things on your own. Look at the numbers and ask yourself what that could possibly mean. Okay, getting into the details, if you hover over each of these candlesticks, what will pop up is actually a menu that displays what those exact prices ended up being. So like I said, you have your open, high, low, and closes. On this day, it looks like it was August 29th, 2023. Microsoft shares opened that 5-hour period at $322 a share. The highest it hit was $328 a share. So if you bought at the open and sold at the high, you made $6.98 in profit. And then you can see the same thing for the lows. The only thing here that might not be familiar to you is the volume. The volume is just simply the amount of shares that were traded over that period of time. So for Microsoft during this 5-hour period on August 29th, 2023, there were 9.7 million shares that were sold, and that 5-hour period started at 9 o'clock. Alright, diving into this next part, talking about bidding and asking. These are two commonly used terms in investment environments that in our typical day-to-day language don't represent much difference, but have a significant difference in an investing environment or in a stock exchange. That difference is which represents the demand side and which represents the supply side. When you hear the word bid, you can immediately associate that with the demand side. It is a bid to buy. It is saying that this is the price I am willing to pay in order to buy one of your shares. On the inverse of that, your ask is asking to sell. So when you think ask, associate it with the supply side. The ask side is saying, this is what I'm asking you to pay me in order to buy one of my shares. So just burn that into your brain. Bid means demand, ask means supply. So the spread simply represents the difference between the ask and the bid. It's the variance in that negotiation, and obviously the smaller the difference becomes, the more likely the order becomes to being executed. The person who executes that order, unlike in your typical negotiation where I sell you a chair and I say $10 and you say $8 and we meet in the middle at $9 and that's done, for a stock you actually have to have a licensed individual or individuals to execute those orders, sort of like a cashier. And those individuals are going to be brokers or brokerages. Whatever the price that they execute that order is, that is the price that ends up appearing on the stock quote page as the last price. It's typically an indicator of about what you'll be paying in order to buy a share, because that was what the last person paid to buy a share.